Did you know that Social Security was changing again in the year of 2026, the year that we're in? It's going to affect your paycheck, your benefits, and your taxes.
Yep. And there are three categories of people who this is really going to affect. The first group of people are people already collecting their Social Security benefits.
Mm-hmm.
It's going to affect the people who are close to claiming, so probably in your 60s, people in your 60s.
Yeah, that's us.
And then the third group of people this is going to affect are people who are still working. So people who are in their 40s and 50s.
Yeah, so stay tuned to find out how these changes could affect you. We brought back Mr. Jammie Lyell, who's a friend to the show. He's from AARP. He's the expert on Social Security, and he will break down all the things that are changing.
Can't wait. Let's get into it.
Let's do it.
If you don't have enough money saved for your retirement, like me and millions of other people, you're not alone. Welcome to the Wise Retirement Podcast. We'll learn how to invest, save, and earn more toward a comfortable retirement. Hi, I'm Angela Kay.
And I'm Reginald Thornton, along for this ride as well. Did you know that 20% of Americans age 50 and above have no retirement savings at all? Even worse, 3 times that amount are concerned that they don't have enough saved for a comfortable retirement.
Reg and I will talk with experts in their field, explore catch-up strategies, share success stories that we hope are inspiring, and learn about family wealth-building techniques that actually work. We'll also break down those complex financial topics into clear, actionable steps that everyone can understand and use.
Welcome to the ride, everyone.
All
right, so welcome back to the show, Jammie. How you been?
I've been good. Happy to be back. Twins are growing strong, and my PhD is keeping me busy.
Okay.
Well, look, these are all positive things, so it's good.
Yes.
As they say, it's good to have you here, and most people say it's good to be here, so
right,
we're happy to have you.
That part.
So last time when you were here, we talked about whether we should claim Social Security early or wait until we get to our max age. And if you didn't see that episode, check it out. It was a great one. And while you're in there, if you haven't subscribed, please do. Today, we're zooming out to a bigger 2026 Social Security change that everybody needs to understand. And so from a high level view, can you talk to us a bit about what the 2026 changes are with Social Security?
Well, the most popular one, top of the list, would definitely be the cost of living adjustment. Some may already know what that change was that's in effect now. But that was about $56 a month. So from an average of $2,015 to $2,071. That started in January 2026. And then SSI recipients also got their first COLA boosted payment on December 31st. So that is definitely one big one. I can keep going down the list. Do you want to just go down a list of all of them? Or
Yeah.
So next would be probably the Medicare premiums. You talk about Social Security, Medicare always comes up just right after that. The Medicare Part B that comes out of your Social Security automatically, that if it's set up that way. So it went from 185 to 202.90. So that's about a 9.7% increase. That's like offsetting the COLA by about $17.90 per month. So that's how it adds out. Next would be, of course, taxes. So after Social Security, after Medicare, next thing is like, okay, what about taxes? And always important. I always try to let people know that Social Security is primarily funded by 12.4% tax on most workers. So that means you pay 6.2%, that FICA tax that we always see out of our paychecks. And employer pays the other 6.2%. And then if you're self-employed, you have to pay the whole 12.4%.
Gotcha.
That's always been in place. The income that's subject to the annual tax is different each year. They change that. So you'll pay those FICA taxes on your income up to $184,500 for 2026. In 2025 was $176,100. So once you reach that. So once you reach that 184 number, you no longer are paying FICA taxes. So you'll be looking for a refund. And if you're working for 2 employers and you go across that amount, that threshold, you'll be looking for a refund from those. A little fun fact about that: people that are millionaires stop paying FICA taxes in February.
Right.
That is always a funny thing to me. Yeah, after a month of working, we're good on FICA for the year.
Yeah, I'm good for FICA. Now I can max out my 401k and my mutual
Right.
accounts and all type of stuff.
Yeah, unfortunately, I'm not in that bucket.
Yeah,
Yeah,
not here
the
either.
average citizen isn't, And then, of course, you have the new tax break for people 65 and older. That's been a big one, too. That's come up in some of my presentations. Offset taxes on Social Security income for million of older Americans in 2026. So it's a new deduction that will reduce your taxable income by up to $6,000 for eligible tax years. It applies to people who are at least 65 and at the end of 2025.
65 at the end of also at the end of last year. It's
Yep.
okay.
Yeah, so individual filers with a modified gross income, MAGI, MAGI, most people refer to it as. So it's up to 75,000. Or married couples that file jointly, it's a combined. That's important. Combined, that MAGI up to 150,000 can claim a full 6,000.
Each.
Okay.
6,000 each.
Yeah, yep. Well, the full 6,000. You'll be able to claim the
full 6,000.
Okay.
6,000. Individuals with individuals, and they are lucky to hit 175,000 for single filers or 250 for married couples that can claim the reduced deduction as well. So that's,
okay.
But I always direct people to that tax professionals for that one. I don't really get too much into the taxes. And then you have
Makes sense.
earnings tests. A lot of people ask about, like, can I receive Social Security and still work?
Big
Always a
question,
popular
yeah.
topic. Of course you can. The difference is if you're subject to the earnings test or not, which is if you're working over a certain threshold before you reach your full retirement age. So for anybody born 1960 or later, that full retirement age is 67. So if you're claiming before 67, you claim to 62, 63, but you still continue to work, that's fine. But after you make over a certain amount that's changed each year, you're subject to how much your Social Security check is taxed.
So if you make over a certain amount in your actual job, and once you hit that point, the Social Security tax keeps ratcheting up.
Yeah, so it's a threshold, and it does change annually. So for 2026, you didn't reach your full retirement age until like another year. That's very important if it's like years in the future. So $1 is withheld. So yeah, it's not really taxes, it's actually a reduction.
Okay.
$1 is withheld from your Social Security payment for every $2 you earn above $24,480.
Okay.
And that's for and then that changes. So if the year you turn your full retirement age, that's 67. Once you go, it's $1 for every $3 you earn above that limit. And that limit is $65,160.
Okay.
So you get a threshold, a little bit of buffer, if you will.
And just because I remember us talking about this before. Just briefly, what happens? So let's say I'm 62 and a half, because I'm in that bracket of I'm born 66, so my retirement age you're saying is 67.
Yeah, if you're born 1960 or if you're born 1960 or later, 67.
Okay, so if let's say at 62 and a half, whenever I'm eligible, I start requesting or getting Social Security.
Okay.
When I hit my full retirement age, is there not a refund, but do you get any of the money back that I couldn't get my full retirement at 62 and a half, but at 67, I'm getting it. The money that I lost in between, do I get that back or is that just gone?
So if you're working, say you're working during that 62 up to 67 and never reducing, because it's your highest paid amount over 35 years is what the calculation is. So if you're working and not reducing your Social Security like that we just went over, it's not all gone. It is returned to you in a credit in that particular scenario. So they'll return it in a form of a higher monthly payment, not a lump sum, but they'll adjust what was reduced based off what they call the earnings test.
Okay, that's fair. That's fair. I couldn't remember from the last time. Yeah, I mean, at least it's not lost. Whether if you were getting $200 and they bump it up to $300, you're still getting it back over time.
Yeah. Yep.
So in that case, I was going to say if you flipped it and you weren't working, say you started collecting at 62 and you're not working, and then you
Mhm.
want to start back working maybe a year or two later. How does that? Is this the same
And you're
situation?
collecting in that scenario or you're not
Yeah.
collecting?
You're collecting. You're collecting at 62, you stop working, but then in a
Gotcha.
year or
And you
two, you're
return
like,
back
I
to
want to
work.
start working again.
Yeah, yeah. So that works too. So, those 35 years, what they take in that formula as a whole, it doesn't have to be consecutive. So that's kind of across the
Uh,
boards. You stopped working at 62, you went back 2 years later. Say they wanted to bring you back because you was just that great at your job. They gave you a nice payment or a salary for that year or two.
yeah,
And
yeah.
so that's still going to go into your 35-year calculation. Of course, your Social Security check will be limited or reduced because you're making that much more money above the threshold. But yep, it will still be credited back to you once you switch to your full retirement age. You'll see what that changes.
And
Oh,
so you say it takes your highest paid 35 years.
Yes.
And so in Angela's scenario, if I go back to get a job and I'm making way less, it's a
Mhm.
part-time gig. I'm making
Gotcha.
30,000 a year. Will I be penalized for making less money, or is that just not factored into that 35-year window at all? It's still sticking with the 35. It's not the number of years, it's the
no,
highest number of years.
Right. And that's a good question. I get that
that's a
question
great
often.
question.
So it's your highest. So even if you say, I don't know, just only cleared 12,000 off the part-time job, for example, it's not going to be included in that 35, that high.
I got you. Okay.
Yep.
And you're not
Okay.
going to be
And then
penalized the dollar or $2 for every dollar you make under
right, the
24,000.
dollar for every the $2 you're over that
A
limit.
dollar for every two.
Correct.
Yeah.
Which is a strategy for some. They go back to work, but just take a part-time job. So they stay under that threshold, or, there's other
Oh, okay.
means. Maybe, you get paid directly in cash, then
Yeah.
and it's based off of what's reported of what you're paying your taxes on.
I got you.
And then the last one, that's a highlight for the year will be the qualifying for benefits. So that
Hmm.
changed. Well, in 2026, you earn at one credit for every $1,890 that you make each quarter. So you need to do
Okay.
that. You need to make that 4 times in a year to receive all of your working credits for Social Security, because you need the
Okay.
credits to add up to those 35 years. And it's in place at that low amount, so that way that even those that don't make that much can still earn that Social Security.
Okay.
Yeah.
Look, that's been helpful already.
Yeah.
Right.
Yeah. I wish I could get in the ear of more of my peers that's maybe like in their late 20s.
Yes.
How important
Yes.
this is to that 401k strategies, your investment strategy. At the end of the day, Social Security has never missed a payment since it was created in the 30s.
Hmm.
Also, it's the one guaranteed payment that moves with inflation, so you can always expect to get your check,
You know,
Mm.
you know what,
month.
Jamie?
Yeah,
I have a question with that one. So a lot of people are doing gig work. I don't know if they're paying into FICA. So how is
gotcha.
that going to affect Social Security stability going forward? Like, will I be able to get paid
Yeah,
and reg and my sons, our
great
children?
question. So I use an example. I have a friend, like a bartender. They don't pay FICA taxes. So unfortunately, since they haven't paid into Social Security, they might not have much or any when the time comes. Unfortunately, because you didn't pay your FICA taxes.
Right.
With those that are receiving Social Security, the second part of that question, as long as employees go to work and employers pay taxes and we pay taxes, you'll
Mm-hmm.
still receive your Social Security checks because it's a pay-as-you-go system. I pay, you pay, we all pay. But
Mm-hmm.
the thing is about, what you hear about in the 30s, 2032, 2033, depending on where you're looking for your sources of that Social Security being able to continue to pay full payments. That's
Yes.
when it kind of goes into the part that Congress has to make a decision on how to restructure the formulas so that way
Hmm.
we can continue they can continue to keep paying 100% of benefits. Because I believe back in
Yeah.
the 1950s, I'm not a
Mm-hmm.
historian, but back in like around the 1950s, it was about 12.4 workers per person receiving Social Security, and then it's
Okay.
it's estimated that in the 30s at some time 2030 that it would only be about 2.4, about 2 workers, 3
That
workers
makes
per
sense. That really does make sense
person.
given how
So
things are
it's
going
different.
and
Not as
how
many
people.
people are working. Like you said, people
Yep.
doing gigs.
Right.
They're
Mm-hmm.
doing other things and not paying into it. They always talk Social Security retirement, but you have SSI for those that cannot work at all. That's there for you. You have Social Security disability that's not only there for you, because people used to always ask, like, when should I start caring about Social Security? So I used to
Mm-hmm.
always go with, 32. 32, that's that from 32 to 35 years, boom, 67. You should be caring about Social Security. You're trying to max out your 35 years. But now
Mm-hmm.
I'm thinking you should honestly think about it as soon as you have a kid. Because if something happens to you or you went on disability and then you didn't survive your disability, it ended in an unfortunate death. Social Security is there for not only just your wife, but for your kids and your dependents until they turn 18. So, I mean, Social
Mm.
Security is like your Gerber insurance. I mean,
Yeah.
it's your Gerber.
Yeah. Yeah.
Yeah.
Yeah. Yeah.
When you think about it
Interesting.
as a whole, it's your life insurance as an American, not even just an American citizen, because even if you are a foreigner and you paid FICA taxes, you still earn Social Security as well.
Wow.
So that's why it's
Yeah.
important that everyone pay taxes and work. But that's a different topic for.
Yeah. Yeah. I tell you, it's something that you never think about. But at some point, maybe after we spoke or somewhere along the way, somebody was like, well, you need to create an account on the SSA.gov.
Yes.
Yeah, I remember that.
And I went on there, and the first thing I saw, it said you'd earned, I have all credits for retirement. And I was like, wow, like
Yeah. Yeah.
that's
Yeah, same
crazy. Like
here.
I never would have thought that I would have been happy to see something like that. It just never
Right.
crossed my mind.
Yeah.
But yeah, it was a crazy thing to see.
Yeah. 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 Definitely.
Yeah, we
And
should
then,
all
and
check
then,
out that.
yeah, it's important to have it. I just had someone contact me asking about something they received in the mail, talking about their grandmother's payment was going to be reduced, and she's in her
Hmm.
90s.
Mm,
I was like, why would her Social
Oh.
Security be reduced? She's not like working and she's above age.
right.
What's going on? So they said they received something and nothing happened. So they thought that was fishy.
Yep.
So I was able to tell them, like, look, create that my Social Security account. They was able to finally get logged into that, see the notifications, see what the payment was supposed to be. And ultimately, I assumed that was spam.
Mm,
You're able to
Damn.
really see what's going on by logging into your account.
yeah. I'm glad that she had somebody to do that for her.
Yep. And I'll
Because it's important.
Yep, and I'll always keep plugging it in that you can make that my Social Security account at 18. I recommend you do it even at 18. If you got a kid or
Mm,
a grandkid paying taxes, they should make it.
Mhm.
They should look at that
yeah.
Social Security in the same light that they look at that T. Rowe Price or Morgan Stanley 401k.
Mm,
All plays a part.
You keep tabs about it. Okay, so you mentioned we should know what our Social Security, we should always be aware of what's in our account at Social Security. What would you say we can do as citizens the biggest thing we can do to impact Social Security for our benefit? What can we do? Can we do anything to make sure it's there for our children?
Yeah, the biggest thing would be to advocate for it. Get involved, speak up, step up. AARP is one of those big nonprofit organizations that focuses on protecting Social Security for not current but future generations. I'm thankful to be a part of that. Just Wednesday, actually, AARP wore red, and they call it like a sea of red, and you see them march to the Capitol Hill and speak up about Social Security and other issues that
Mm.
affect those in retirement. So I would say get involved, advocate. ERP is in we have a state office in every state within the country. So even
Mhm.
yep.
in Hawaii, even in Puerto Rico. So I would say just reach out to your state office, get involved, see how you can volunteer, educate those in the community. Volunteers, sometimes they surprise me on the things they've accomplished with their programming, but then there's
Hmm.
so that's a way to get involved, definitely.
Okay. And what would you say to a college student? They're in their 20s. They don't care about Social Security, but what would you say to them?
20 college student, they don't care about Social Security. So I'm
Or they don't
assuming that they're
know
still,
the impact.
yeah, yeah.
Yeah. Yeah. I think it's probably more about not knowing.
Well, I would probably try to explain what it is first and how they're going to be paying into it once they receive their first check. And then I would also highlight the importance that if it's something, even your grandparent or you have a loved one or a friend that has a grandparent that's receiving Social Security,
Mhm.
and let's just say if Social Security wasn't there for them and they couldn't pay cover their basic needs, that all more often would mean that the child or the grandchild would help their parent out, which goes into caregiving. And most kids in their 20s, when they do get their first house, don't want their grandparent or parent moving in.
Yeah.
So Social
Right.
Security kind of prevents that. I kind of try to
right.
say, like, do you want your parent or grandparent to move in your 2-bedroom apartment? If you're lucky, the
Right.
2-bedroom apartment is on sale for that time. You know how that
Right.
works.
Right.
So
Nope.
that's probably what I would tell them. And then also, when you're looking at your retirement account and you're looking about how big your 401k is or your investments in your mutual funds, when they do those calculations on what your average amount would be in your 401k in the future, if it doesn't
Mhm.
tell you, it's really calculating Social Security estimations in that payment as well.
Mm.
No, T. Rowe Price does that with theirs. And that
Okay.
calculation, they do like a confidence score. And Social Security is in that calculation. And I know that from my 1.5 years as a financial advisor at T. Rowe Price.
Yeah. Okay.
Uh,
So, yeah.
go ahead, Ed.
I was going to ask you about, I know you mentioned earlier, we were talking before we got on about
Mm.
your book. Last time we talked,
Yeah.
you were a part of the Dummy Social Security for Dummies.
Tell me. Yep.
Yes.
And then now you've published a second book. Could you tell us just a little bit about that book?
Yeah, so this book was one of my biggest projects for last year. This was the 100 question and answers on Social Security book. It's still a Wiley book, so the ones that make the For Dummies series. So it's
Mhm.
a book with the top 100 questions about Social Security, from how to appeal, disability, SSI, what's the difference, all of those questions, how to maximize your Social Security, etc. And each question has 1 to 2 paragraphs for an answer. So it's really easy to reference back after you purchase it, either 5 years from now. A lot of information in there is very evergreen. So it's
Okay.
very
Mhm.
deep into policy. So that information usually won't change that often, other than, of course, like the numbers of like our earnings limit for 2026. And that's
Right.
one year. But as far as how to appeal a decision is always going to be the same from 20 years ago to today, still the same, how you appeal it. Switching from spousal benefits to survivor benefits, that's been the same since that was ever a thing. So some of those things is really good as a resource. And not only as the audience is on this podcast, but we use it for our volunteers and our staff as well across AARP. We did go with AARP experts for the byline, but everyone I know with all my colleagues know how I feel about that. But it was a great project, and it's a
Okay.
great resource.
So how do
Well,
we
I'm
get
definitely gonna look
access
to get
to it?
that. Yeah.
Yeah.
So you can go on, you can purchase it from the Wiley website. You can purchase it from Amazon and Barnes and Noble.
Okay.
What was the
Yeah, we
first one?
definitely
I
got
don't know. My hearing.
the Wiley, the publishers of
Yeah,
it.
the publisher. You
Wiley.
can buy it directly from the publisher.
Okay. Definitely we'll
Yeah.
check it out.
You mentioned earlier, you were talking about the increases in the Medicare benefit, a number of different things. And with all the changes, I'm wondering, are people actually seeing a difference in their checks? Are all of these changes canceling each other out?
It's a very small difference. Like like when we was talking about it, it's about after you get your COLA, then the Medicare kind of takes away the $17, but the average
Yeah.
is already in the $56 range. So
Yeah.
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 a retired worker, average Social Security payment after all of that, let's say before the COLA of 2026, that 2.8%. Before that, let's say
Mhm.
we were receiving, and I'm no mathematician, $2,015. So you're receiving
Mhm.
$2,015. After the 2.8% in the COLA, now you'll be
Mhm.
receiving an average of $2,071 a month. So
Okay.
is it a difference? Not that much. But
Right.
when I look
I
at
mean,
it
it's
in
enough for lunch.
perspective, I mean, when you got a raise at work, was it really that big of a difference?
3%.
What-
I mean, the average.
It's a fair point. It's
It's
a
not,
fair point.
it's never enough.
Yeah.
It's never enough.
Yeah, that's a fair point. Yeah, I just wonder. Oftentimes we hear when you're getting an increase here, an increase here, increase there, and I
Yeah.
just sometimes I want to kind of shrink it down and have people understand. It sounds like a lot is coming,
Yeah.
but really, it's not going to be it's not life changing stuff.
Yeah.
You know,
Yeah.
you'll still be surviving, but
Yeah.
you're not getting a life changing bump
Right.
in that.
And when you think about it, when that was like a retired worker, of course, there's different scenarios, married couple that both receiving benefits, survivor benefits,
Yep,
all
yep,
type of things.
yep.
So like for that retired worker, that $2,015 or $2,071 is not that much. And when you look
Right.
at numbers, not that much. But then you think about
Yep.
an example of someone that's a survivor, widowed parent.
Mm-hmm.
She's the widowed
Yep.
parent, and she has 2
For
qualified
sure.
children, all on the
Yep.
record. You might see you'll see almost a little bit over 100 in hers. But is it
Mm-hmm.
really that big of a difference when it's only 100 that has to be split across 3 people, 3
Yeah.
individuals?
Yeah.
So yeah, it's never enough.
Yeah.
Well, the good news is
Never
there
enough.
is a bump, and hopefully at some point it gets to a point where you go, I see a huge change. We
Yep.
got to keep calling those congressmen.
Yep,
Definitely.
keep calling them. I've asked some of my peers, and I'm 36, and I've asked some that are younger than me, in
Mhm.
their 20s, and do you know how to contact your congressman? And most don't. So I think that's very a big place to make a impact in those and get them to advocate. Those upcoming generations being able to advocate
Yep.
while speaks loud. And I say it often. It's like one person might not be heard, but if it's a million of us, I mean, what Congress is going to do? What will Congress do?
That-
Listen,
That's a fair point. That's a fair point. Yes.
They basically work for us.
Yes.
they do. We have to vote them in, pay them through our taxes.
Mm-hmm.
They work
Mm-hmm.
for us. They are serving their communities and their constituents.
Yeah. I don't know. I think throughout this conversation, we've kind of covered all this stuff. You got any
Exactly.
extra special?
I think we definitely covered the top major changes for this year.
Yeah. 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 Well, that's it, Jamie. Is there anything that you want to make sure that we all walk away with today?
I know Social Security is important. It's important for current generations, people receiving, about to receive, and hope to receive in the future.
Okay.
I'll just say to advocate. I have a monthly call. We have it at AARP with our volunteers for Social Security that's raised their hand to help volunteer and educate others about Social Security.
Yeah.
I would say reach out to your state office and get involved. Hop on my monthly call. It's the 3rd Thursday of every month. See what's happening, get in your community and help those know what their options are.
That sounds good. So the volunteers you mentioned a few times,
Yes.
if we have questions after tonight's show, how do we get those questions answered? Do we go to AARP and then we'll get a volunteer who responds to us? Because I know we're going to have questions, more questions.
Yeah. Well, if it's in regards to directly to the volunteering for Social Security, and you can handle that all through your state office, whether you're in Maryland, Virginia, DC, the West Coast, so office everywhere. You can just call them. You don't have to go in, and they'll get you set up to be a volunteer in your community. And then you raise your hand that you're really passionate about Social Security, and then they'll get you started and get you involved.
Okay, so you can volunteer, which means you're going to learn firsthand knowledge, and then
Yep.
also as a just the individual, if I have questions, then I just go to AARP and or get that book that you just did, the book.
Yeah,
Yeah.
you can go to
Definitely.
you can get the book if you're more of a technology person. We did just finish our chat bot that helps search through our articles. It's not Chat GPT,
Oh.
just internal for AARP trusted resources. So instead of just going through the articles, you can always go there and talk to the chat bot, see if that'll
Okay.
get you your answer. If you can't get your answer,
Hmm.
it is a section there is a link that you can then send an email to me or one of my colleagues, and then we get back to you. It is something that might have something for you next time we talk. I'm thinking about, I get a lot of questions directly. So I'm also thinking about just having my own portal so people can directly ask me their questions.
Whoa.
Now, do you have time for that, sir? Because
I
you
know,
are
right?
pretty
PhD
damn busy.
PhD candidate, all that.
I will say it's not part of this conversation, but right now I'm a program manager ×2 at AARP. So I do Social Security program management, but I also work on our for-profit side, helping our learning management systems that roll up by agents and our providers like Barclays and the Hartford and others. I'm very good at streamlining and automation.
Okay.
It allows me
Okay.
to really help manage my tasks. Very good.
Okay. All right.
Gotcha.
But that's
So
why I have
what
to.
I'm hearing you say is yes, you have time.
I can find time.
That's
Helping people, I
amazing.
can always find time.
All right. Well, that's
That's
good to
amazing.
hear.
Yeah. Well, that brings us to the end of another episode of the Wise Retirement Podcast. Jamie, thank you again for joining us.
And I'm telling you, the information we need to start having a weekly session with you.
Hey, look, you just hop on that monthly call. You get that 3rd Thursday in the afternoon. I think it's about 2 o'clock, 3 o'clock. Yeah.
Okay.
But we need to jump into that. Well, Anyway, we hope you enjoyed the show, Jammie. We certainly appreciate you joining us again. If this helped you in any way, hit subscribe through YouTube. And if you think you missed anything, you can find it all there on YouTube. Hit like and share and comment as well as you're watching.
Yep. And check out the full show highlights and action steps from this episode on our Substack, which a link for that is below.
Yes, indeed. That is it. I am Reg.
And I'm Angela Kay, reminding you we're on this journey together. Until next time, take care.
Welcome to the ride. Thanks, Jammie.